Good day, guys. Welcome back to the channel. Well, today I thought I'd take some time to showcase a bit more about the tool, how to use it, or at least how I would use it. And today we are looking into scalping, because a lot of people like scalping, like trading for short moves. The advantage of scalping is you can use size on your trades, because stop loss is quite small compared to trading on a high time frame with a strategy that is not so precise on entries. You would have to have wide stops in order to give the trade room to breathe. Yeah, so on this one right here we are looking at the 1 minute time frame. So with RastaWay you have the advantage of two things. What the tool does is it provides you with a signal when trend changes. It alerts you to say, okay, on the 1 minute time frame we are now biased to the upside, and all you have to do is look for entries to trade higher, and it alerts you for short sales, 80 pips maximum you can get. This one alerts you for buys, that's 91 pips. This one would say sales, you'd get like 45 pips out of it. This one would say buy, which only lasted for 20 pips, but most of the time you'll be in drawdown, right? This short entry was late, but the criteria of entry is singular, so you cannot have it give you an entry there and expect to get an entry there. Once you start tweaking the parameters in order to have an entry there, you might find that it will start giving you like buy there, it will give you a sell trade there, and it becomes a bit too noisy, which is something I've found to be a bit annoying on the 1 minute time frame. But keeping the settings like this would give you like a bit of long-term bias in the 1 minute time frame, right? So imagine a scenario whereby you are here, or actually let's go to today. This is today, this is now. So here is now. From this point and on, RastaWay signaled a bear trend, right? How would you capitalize on such a move? Easy. First is just to place a trade and hold. When the signal comes out, you place a trade and you hold. So currently you'll be 39 pips in profit. So if you choose to do that, it's either you're gonna exit, like you enter there and you exit with a loss there of 6 pips, then you take a buy, you hold it, and you exit there with 62 pips, and then you'll be currently holding 37 pips on this one. That's cool, that's okay. But you can also profit multiple times in the same trend. How would you do that? So if we zoom in, look at the bottom here, you'd find that there's two histograms to the bottom. There's one which shades green in the red. When it's red, it's down trend, but sometimes you'd find the bottom part would shade green. So what this means is the indicator is assuming that the market is starting to push higher, which is like a retracement now. Within this period here, it's saying, mate, we are in a retracement, but the trend is still down. So a good entry would be within this period here. You would want to look for reasons to enter. If you want to look for supports and resistance, you look left, you would find this zone here, you would find that zone there, right? And you could mark out that zone there. But this is all like random. I just picked it now because it looks nice, you know. Let's not do that. Let's delete all this and let's remove the what can I say, like it's the disadvantage of a lot of strategies. Like they have that, I can't kind of find exactly the word that I want to put through, but what I'm trying to get to is this is objective. Like, you know, like someone might come here and just choose that, someone else would want to choose that as a point of entry. So I'm saying we don't do that with these two. You just kind of wait it out. If you wait it out, the bottom will turn red and the top part is red, and that'll be your entry short right there. And if you look what price does after that, it plays around in this zone. It plays around in that zone and it never goes above that swing high, which is this one, is the highest point of the retracement. It's not always the case that it doesn't, but it gives you that good entry. Like you have an entry with a very tight stop of 7 pips, and once you get down to 15 pips there, you're already at a 1 to 2 risk to reward, and yeah, you can take out your money there. 1 to 2 risk to reward. All right. Another way is to keep pumping it. As long as it keeps giving you these re-entries, you add another stake. Your stop has been improved, so you can maintain your risk in the market by improving your stops and using the remainder. Similarly here, you can do that here, and this will probably take you out. If you attempt to short there, you might be taken out at the close above, right? So if you had not exited this with a 1 to 2, you'll be coming out there with 6 pips. Then you wait it out, you strike again right there, you come out again on the top there, you wait it out, you get another entry there, and you find lower prices. You never came back higher than this one, like that. That's another way of managing these trades if you want a tight stop, but I don't do that. I don't do that at all. What I do is I just size in my trades. When I get a signal, I enter short, so that will be a sell trade. I'll say to myself, well, I want to have a maximum of 3 trades in the market at any given time. So if I am short here, short there, short there, this one here I would rather have this one running all the way to the bottom, like to the end of the trend. And if it happens that the trend ends with this trade negative, it's okay, because that's a runner trade. This one here, it's small due to the nature of its stop. The stop is quite wide, but at the same time it stays in the market for a bit longer than most. So this is like 1:3 risk to reward, because the risk was like 30 pips down there. This is 90, so you get a 1 to 3 with this one. You can consider exiting at the top, but otherwise this one I would want it to last as long as the trend lasts, right? And these ones I would enter them and plan to exit them with a profit for as long as we are still bearish, regardless of these retracements. So as long as we are still bearish, a trade like this would carry its drawdown all the way up there, 16 pips, and I'll find exits down there where it's profitable. This is different from just holding a trade blindly just because you're hopeful. Like, what draws the line? Is it a big loss? What draws the line to say, okay, I've been holding for too long? So the whole idea is you do a back test, find out how many pips the instrument you want to trade typically takes you into drawdown before it changes, before it gives you profit, right? So you look at an instrument. We do it here. So you pick an instrument. I want to trade GJ. So okay, how many pips that GJ typically go into drawdown before it goes back into profit? On the ones that ended up with profit. Don't worry about situations whereby you would get a sell trade here and the trade goes against you and hits stop loss. We are worried about trades that actually take out their swing lows. Because if a signal is given here to say short and you actually take out this swing low and you don't take your profit, that's on you. But the fact of the matter is the trend was true. So if you were given a sell trade here like that, and then the indicator gives you another sell trade there, right? This sell trade managed to come all the way and take out this low at 13 pips. Anything beyond that is you trying to hold for more, but the trend has been satisfied. We've taken out a low. We've confirmed that we are still bearish. Confirming bearish doesn't mean we are going to go lower. Because sometimes you come to this point and there is people who are interested in buying this liquidity here. They are very much interested in buying here. Like you see how it came back, but it actually failed. They were not brave enough to keep pumping it. They were not bold enough to keep pumping it. Or the shorts were just too real. Because they tried shorting it here. It failed. Went all the way down. And they sized in to come out with a profit above this one. And then they liquidated everything. And as soon as they came out, price tanked. So understand mechanics, how this market is moving. What's driving price to go where it goes? What drives it? Rejections are not driven by just drawing a line to say, okay, I want to see support here. No, it's the price. Someone is interested in that price, and that someone is moving big figure amounts. So you are bearish here, price retraces, comes to this zone, they failed to go higher, and they put volume in, and the system confirms, yes, money has been put into the market now, let's go. So if this trade manages to run and take out this low, then the trend was true for 6 pips. This is a scalping strategy, remember? But these 6 pips, they are guaranteed if we are still in a bearish trend. So when we come here now and we get another bearish signal there, and the market fails to take out this low, but instead it comes and takes out this high, what does that say to you? I would think the market is now bullish. Wouldn't you? It makes sense. Because now you see how price actually pushed higher. But it's not always when you take out these highs that we've changed trend. Because if you look here, we did come here and we traded below this. And if you look here, we had a swing low and we had another one here. We did trade below it. Right there we had this swing low. Actually, let's switch on this part of the tool. Super intelligent. This is now clearly marking our swing highs and swing lows, and it clearly denotes them as a higher high, higher low, higher low, lower low, lower high. This is what every technical trader needs. And it's all written in a code. Consistency is achieved by using tools like this. There's no bias, but it's just pure algorithmic understanding, reading the market, translating it. As I said before, these two attempts to decode the market and give information in a way that a trader can understand easily without confusion. The 1 minute chart is supposed to be very much full of noise, but if you use a tool like this, the noise is reduced. It's not removed, but it's reduced. So you can have a chance to think. Even at sell trade like this, it managed to take out that low. So the bears were in it. The bears were in it for 30 pips. This one, the bears were in it for 40 pips before it retraced. Similarly here, it later on managed to come and take out this low, but we had a challenge here. It challenged its highs, closed above it, but the algorithm managed to understand this as a fake out. So this tool actually goes on to try to distinguish between a true breakout and a false breakout. We are taking out this lower high, but the instrument is saying no, this doesn't have to call a change of trend. We took out higher highs several times. It's not every higher high that you break that calls a change of trend, mate. We took out a higher low here, and immediately it called a change of trend. So the algorithm has got a advanced method of understanding this market. It translates these movements in a very intelligent way. We were taking out lower highs here, took out a higher low here, and we took out another one there, and then immediately the tool said, okay, this is good enough. This is good enough. It's good enough. But even here, when the market was falling, how good is that? How good is that, mate? Look at that. We managed to see within this noise, when the day was starting, that we have a bearish day. For 7 hours of the day, we were going bearish, 62 pips. We traded above these swing highs and all these swing highs, and it didn't matter. The tool was saying, okay, these are fake breakouts, but this is a true breakout, and it's confirmed. So it doesn't take much to start getting the feel and the drift in this tool, but you just have to manage your trades, because not all signals are correct. Let's go back, because the market is trying its best to deceive us. We started going short there, price went higher, we waited for a completion of a pullback. This is how you win prop firm trades. Prop firm challenges right there. We're not expecting price to go beyond that. You risk that high, 20 pips, and you hope to take a good grain on the bottom. 1:3 risk to reward. But not just that, you had an opportunity to add more cells when this tool was changing, or was completing its retracement cycles. You had an opportunity to add size into this trade. By the time you get to 60 pips, you'll be fully sized in, and it's a beautiful harvest down there. Well, the question will be, how do I exit with 60 pips? There's so many ways. But the most important thing is, for us to achieve consistent, you need tools like this. That's why I developed this tool for myself initially. But now that I've seen a lot of traders spending a lot of hours on YouTube watching people explaining strategies that cannot be replicated, even themselves cannot replicate the same trades if given a chance to retrade that time frame. How difficult would this be for someone else to replicate signals that are generated by this tool? It wouldn't be hard. It wouldn't be hard for someone to replicate these signals, because you just have to wait for the tool to tell you, and it does it in real time. Currently it's saying we are in a deep retracement, right? And it might come and just rip a signal somewhere here, because as I can see it right now, we've been going up for a while, and expectation is we might find ourselves coming out of this channel and starting to go down, because the last signal was true. We managed to take out our low. It means this bearish trend is still valid. It's still good. So if we get a sell trade there, we will take it with hopes that we can still smash these lows. We might not. Might just trend back higher and take out with a stop loss. It's no different to this one. The last buy we had here, all it says when you get a loss with this trade, with this system, is the trend is over, or at least the tool assumes the trend to be over. So if the market decides, okay, we're no longer going higher, it's fine. Take an L. You might, if you keep trading, you might find yourselves in all these sells soon after this one loss. So if I'm to get a signal here that says short and I take it and it stops me out, it's not a big deal. Because it's the expenses I have to pay for me to find myself in this sell trade that will work out, or in that sell trade that will work out, or in that sell trade that will work out. So I cannot pick and choose these signals. None of these look better than the other, if you ask me. Even if it's telling me to buy into a strong resistance or sell into a strong support, I'll still do it. Don't think anything more than what this tool is giving you. Sometimes, yes, you can, and you'll find it to be good, but have a good trade plan. Unfortunately, you cannot make money if you start trading this system, every single signal that this system generates. So right now we're looking at this trade here. We might probably be seeing a red there if we push hard enough, and probably the trend is starting to resume. So we can just drop in a trade in there and see how it goes. there. It did change. So like we've been seeing before, we are bearish, retracement, red bar, we enter. It might choose to do that for the next coming 15, 20, 30 pips, or even it might choose to do this, tell us to sell and just push down and push back higher and change into a buy trade. Still fine, still okay. So right now it's pushing higher, which is very typical of these trades, because what is happening is we do have triggers here on the high frequency traders. They are looking to retest this zone so that they can get more size into the market, because people who sold there will be trying to get out. Like me, I sold there. As soon as price starts pushing higher, there's more chances that I will become fearful and I would probably want to exit. So there is a chance that when trades push high like this, they might end up turning around and going back down. So we'll see how it goes. Regardless of the fact that the market has pushed so many times going down and it's already gone 73 pips down, we are not, so we formed a higher low, right? So clearly this means we are in a push to the upside. This is what it means. It means we are retracing. As much as these minor retraces are telling us that we are done, we are in a push like that. So we finished our retracement. We attempted to go higher, but we couldn't. We started trying to push lower, and now price is pushing higher again, which is this lower low resembling this lower low. So right now price is now striking these highs. Now it's making higher highs, because from here we can only make a higher high, because now we've traded above this swing low, this lower high. Sorry. So what does that mean? It means we hold the drawdown. That's what it means. It means we hold the drawdown and we watch this market and see how it pans out later on, because it's possible, it's very much possible that you would see this price going like that, right, and end up finding its way back home and shorting. It's very much possible. And the unfortunate thing is, as we are going down, so right now we've poked below this one, right? We did poke below that one. It's similar to this one. We pushed higher. It's possible that we might see this pattern. So this too allows you to see the market in a consistent way. It makes it easier to read the market. That's why I decided to make this tool public and at least try to help fellow traders, because I spent a couple of years trying to find something that is got edge, but all the training that I've received was so subjective some the mentor will tell you his point of view and expects you to see the same way, but no matter how many times I would question it, I would never get an answer that would ensure me the same entry as they have. But if we are sharing the same tool, if I share this tool with a person beside me and we have similar rules, we would be in a same sell trade right now. It might not look like a good thing now because I'm in a drawdown, but if you can actually see this sell trade by yourself, see this one too, and also see that one too, that would be very good. If I can have a student that can see the same sell trade as I do right there, size it the way you want to size it. If you want to be heavy in the market, be heavy in the market. But at least you can see the same entry as I do. Those are the sniper entries. That's how I've been getting them all this time. I haven't been sharing my trading behavior, and it's okay. But I've been working on tools. I've been working on algorithm. And this one here is one of the good ones. So now look at this part here. The two assumed that we are going short here, but it ended up just losing 20 pips. But before it lost 20 pips, it managed to generate this sell trade here, somewhere there, which managed to take out its low. So that one was a profitable 20 pips. It generated another one right there, which managed to take out its low, and that was another 20 pips, right? And then the last one was this one, which failed to take out its low, and that one lost 28. So depending on how you want to manage these trades, you might find that this period looks like a loss, but it can actually be a profitable zone if you manage these trades well. If you want, you can have these sell trades here. This one here was so unfortunate. It entered there and it was supposed to come out with 3 pips. So this one will be 3 pips out. This one will be like 20 pips. That's 43 minus 28 here. And then how much do you take out for that one? 20 again. So you like having like a 7 pip loss rather than having a full 20 pips loss. So this has been managed. It's okay, because what happens next is a nice push to the upside. If you don't exit at you exit anyway high there, you still exit there with a 9 pip profit. That's a nice bull. This bull was so rich because it took out so many highs along the way. Similar here, all these sell trades here, this is profit all the way. This buy mode was good too. This bear trend was good. So you can easily come to this market on any given day and catch some good pips before the market decides to make a fool out of you. So where we are now is tricky right now, because what's happening is we've hit here, right? We've taken out that, we put the sell in, we were hoping to exit there with a full profit, but instead the market has taken out a high before it went to our profit. So now we are forced to exit here. That's the problem now. if this market manages to go lower, we are being forced to take out our price right there, because the criteria that we wanted to drive home has changed. The market has moved higher after our entry. It's creating higher highs, because what will happen now is, if we strike that low, we'll automatically have a higher high, meaning we are pushing higher, but at the same time we'll be triggered into another sell trade, but that sell trade would have already ended, because it will form below its exit, because the only thing that it will be trying to confirm is if it is still a bear trend, it will try to close below that higher low, which is this one. And if anything here, we are going to close we are going to close below to get the signal. So that one would have already ended. It would be pointless to attempt another short as soon as this one ends, because the target has already been satisfied. As you can see now, we have traded below this low, meaning this signal here that we are gonna get, this signal that we just got now, is meant for this low, but we have already fulfilled this low, so there is no entry here. There's no entry there. What's actually more imminent is price going higher. That's what has a high probability right now. Because when we attempted to take this, instead we have an immediate push to the upside, which immediately failed also. But as soon as we took out this low, we have satisfied the hunger for sellers, because the whole drive here is sellers want to beat the lows. That's all they want to do. So you'll see here, let's come to this point here. So the scenario we have there is like this. We have a market that's shorting, and this one is a bit off. Let's use this one. So we have a sell signal here that's telling us sell. And these sellers, when they are selling here, their whole drive is to take out these loss. That's where they want to send price. But there's also like buy liquidity sitting here. Right? So the whole motive is to drive that sell trade all the way down there, and then once they get down there, they are happy. All right, they are happy, but they didn't. Instead, they pushed higher. When they pushed higher, these sellers are trapped. So there's two ways of dealing with this. Say that they take a loss here by buying size. They take a loss here and they buy out with size right there, which will cause a serious breakout to the upside, or they fulfill sell liquidity here, which is evident by this push to the downside. But now when we do this push to the downside, we're no longer interested in this buy liquidity zone here now, because all they're trying to do here is to exit these shorts with profit. So they'll dump them on this low, which is right there. And as soon as they dump them here, what are they doing? They are buying, but they are buying in and overstepping their volume. 40, let's say like you have 400 lots there, dump them here by buying back 600 lots. You cover your 400 and you have 200 lots sitting back in the market, and push it higher, and they get high there and they do it again. They size in again, 600, cover 200 and have 400 lots pushing size back down. But when they do this now, they are sitting now in this zone that they had before. This was sitting with so many orders. Anyway, that's all for now. Let's not get too complicated about this, but at the end of the day, what we're just trying to express here is the fact that this system is non-repainting. So what you see here is what actually really happened, and this is evident by how the market gave us this scenario in real time. We took it as we were supposed to, retraced on us, didn't bother me too much. It's just drawdown at the end of the day, because I'm okay with this trade going to 40 pips drawdown, because I'll get it back later on if I have to. And when our exit came, I took my exit right there, right? I intended to come out there with 30 pips, but that one has failed. So I'm out. That's the only reason why price came back down there, because it needed to service me. It wanted to give me an opportunity to come out. But doesn't mean that the sales are over. Don't get me wrong there. Don't get me wrong. The sales are not yet over. We are still in a bear market, and if we get an opportunity to sell again, we will. This one here was not a tradable signal as far as I'm concerned. This one here, it wasn't. As much as we had a retracement and push back down, this wasn't a tradable signal for me, because my next target from here would be this one, and it's already been fulfilled. So I'm not keen to see this trade being traded. So I'll sit on the sidelines and see how it pans out. If it decides to go lower from there, it's okay. It's okay, because this can possibly be just a liquidity grab on the upside there and dumping lower, but that's okay. It's no different to this one. But if you are scalping, this is how you exit it. On the next episode, we'll look again into this same zone, but we'll look into it with a mindset of a trend trader. Not just scalping, but actually holding trades for trend. Because I have a way of precisely exiting these trades here. All these. This one would still be open. That one will be an additional, including this one, because the targets are right here at the bottom. So as a scalper, that's how I would manage it, because our criteria did get changed there. All right, we'll leave it right here for today. Thanks for showing up. Thanks for sticking around. I know it's quite a long video, but sometimes that's how lectures go. It's the only way to get the message through. This indicator is now publicly available on MQL5 for MT4 version only. I will probably be releasing an expert advisor for this one, but yeah, for now only the indicator is available. I'm still working on a few bits and pieces for the EA, and yeah, go there, grab yourself a copy, use it with your own discretion, and happy peeping. Cheers. And by the way, please subscribe to my channel. Thank you.